Hello and welcome to another update video about XRP. Yeah, the XRP chart has been moving sideways all week, so it's not really the most interesting chart short term, you might think, but I think we are very close to some kind of a breakout and a decision here. Essentially, the market has to make a decision. We come close to the end of this potential triangle pattern. So we'll talk about that. As always, we take a look at the chart from an Elliott wave point of view. It is a sentiment-based analysis method which tells us about the most probable scenarios. For now, we are watching for higher prices on the XRP chart. However, that doesn't mean the initial breakout needs to be up. We could certainly see a small move down before going up, but essentially as long as pullbacks, so the movements to the downside, are corrective in nature, which means we have overlapping structures, slow movements to the downside, basically counter trend moves, yeah, we can continue to watch for higher prices. It's also important that the market in these pullbacks, in these corrections, is holding above key support levels. And what are these levels and what are the breakout points? We want to talk about that in this video. First of all, at the moment, the idea is, and that is the main idea, that a triangle pattern completed here on the 13th of January. So from an Elliott wave perspective, there are different labels that we can apply here to a triangle. In a triangle, we are watching for a 5-wave move. We have wave A complete, which bottomed on the 10th of December. The B wave was a corrective rally, which formed the top on the 17th of December. The C wave to the downside formed the low on the 20th of December. The D wave to the upside formed the top around the 4th of January, and the E wave completed here. Important is that it's a series of higher lows and lower highs. And then we were watching for a breakout to the upside, to all-time high territory, which happened, but there's no break above all-time high yet, at least no sustained break. And this is where we are now, and I see the move to the upside as wave 1 again, you know? That's wave 1 of a larger 5-wave move. So wave 1, we're now watching for a wave 2, then wave 3, wave 4, wave 5. This is not the clearest microstructure, at least not the move that happened after the 13th of January low. So we have to be prepared for changes, but this is currently what we're watching for. And based on this microstructure, which is based on an Elliott wave pattern, basically a 5-wave move, which indicates in which direction the trend is going, we get Fibonacci support areas or levels. And these Fibonacci levels, they tell us what the market should do or shouldn't do. So in this scenario that we're tracking there, in this bullish scenario, the market should not break below the box. So we don't want to see a break below $2.52. It would be too low for this scenario in which the wave 4 already bottomed on the 13th of January. That means any break below $2.52, especially if it's a decisive break, might trigger an alternative scenario. In this case, we would assume that the larger wave 4 is still unfolding. So it would introduce a lot of uncertainty, and that means the $2.52 level is our warning level. But it wouldn't necessarily mean that it will crash down. We might just see a slightly lower low in blue wave 4 before we then go up. Or at least before the market attempts another turnaround to the upside. Now looking at the shorter time frame, and just zooming in, you can see a white and a yellow roadmap. So they are both based on the idea that the wave 4, the larger wave 4, formed the low at the end of the triangle on the 13th of January. And the yellow scenario allows for the interpretation that we are holding now above the last swing low that formed on the 20th of January at $2.81. But even here, you know, after this kind of triangle, there are different ways how this can be interpreted. We might see a move down and then go up more directly. I mean, essentially the last key level, important level, is that 280 level. So we can watch for the yellow scenario. You know, as long as we're holding that level, we can watch for higher prices directly. Don't be surprised if there is a break below that level. At 280, it could simply mean a slightly lower low in wave 2, in a larger wave 2. But this is all just really noise. This is not so important. Important is that the market holds above $2.52. And if the market breaks out to the upside, we're going to watch for the $4.20 level as next upside target. And then there is another key level, another Fibonacci extension around the $5 mark. These would be the next levels. This is not maximum, but these are the next levels that we have to watch. Anything further away will introduce just a lot of uncertainty. It's not so clear at this stage. But you see that the market is really coming to the end of a local triangle here, and a breakout is, in my opinion, imminent. But bear in mind, it's weekend. Sometimes the volume is low on the weekend. We might not get very decisive breakouts. So it might just spend a bit of time dancing on that support area until next week. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.